Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today. Enjoy more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with your SD Weekly Metals and Markets Wrap. It is March 9th, 2018, and our guest today is Rob Kirby, and co-hosting with me are James Anderson and Eric Dubin. Rob, thank you so much for joining us today.
My pleasure to be with you guys.
All right. Now, I'd like to pass it off to Eric after we just get a brief recap on this week's action in the precious metal markets. Rob, you've talked a lot about the manipulation with respect to gold and silver. What did you see this week?
I saw the Exchange Stabilization Fund doing what it does best, interfere in the capital markets with its dark money, which consists largely, I would expect, of much of the missing 21 trillion that no one seems to know where they put, as referenced by Catherine Austin Fitts and Dr. Mark Skidmore of Michigan State University.
Now, with respect to the 21 trillion, can you expand a little bit on that? I mean, can you expand where exactly it's from and why the mainstream media isn't really covering this? Well,
because the monetary aggregates that were given by the numbers keepers, which in the case of the Federal Reserve System, it's the St. Louis Fed that keeps the official data on the monetary aggregates, and they tell us that there's X amount of money in existence, like as in so many U.S. dollars have been printed. The reality is the amount of money that's in existence that's been created without people's knowledge is many, many, many times X. And we've seen the entrails of the creation of this money through the brilliant work of Dr. Mark Skidmore and his research staff at Michigan State University, who have gone into the government numbers, and they have found that in the Department of Defense alone, there's close to 20 trillion in that one government department that's been created because we know they had it, but they don't know where they put it or what they've done with it. So money's been created that's off book, and I refer to this off book money as dark dollars. And these dark dollars are what the globalist entity uses to influence and to create, let's just say, guaranteed outcomes in areas that are either of strategic importance or where they want to have influence. And the things that they want to have influence over and the things they like to control are interest rates, currencies, the equity markets, and the price of precious metals. Because these are all things that ultimately, when you check the boxes on these things, it ends up being a report card on the viability or the sanctity of the US dollar as the world's reserve currency. So these are the things that they choose to influence, and they do so with a hammer that is so large but concealed all through these fraudulently created dark dollars, which end up getting siloed in places like the very dark entity that exists in the U.S. Treasury called the Exchange Stabilization Fund. And the Exchange Stabilization Fund, or ESF, is an entity that was created in 1934. It is its sole mission in the world is to protect the ongoing use of the dollar as the world's reserve currency, and it's subject to no oversight by Congress or Senate, and it's operated basically at the discretion of the Secretary of the Treasury in the United States in conjunction with the president. So the executive branch. And all of its activity is deemed to be top secret. They do not publish financials. And this is a very dark entity that's engaged in everything from arms trading, murder for hire, regime change, drug trading, because anything they do is deemed to be in the national interest, and as a result, it's top secret. Any politician that would dare speak of the Exchange Stabilization Fund would find themselves about as welcome as Edward Snowden. So that's the kind of level of secrecy that surrounds this entity.
Rob, you've spent a lot of time talking about the Exchange Stabilization Fund and how it interrelates with the exchange for physical product, the paper markets, and how that relates to suppression of the precious metals price discovery mechanism on exchanges. Our audience would love to know your perspective on how the mechanics of all of that works, because it's a really arcane kind of deep subject. There's not a lot on it when it comes to people in the alternative media space talking about it. So can you walk our audience through how you see that tool set being used to suppress precious metals?
Yeah, sure. The exchange for physical function is a process whereby COMEX can relieve themselves of the obligation to settle demands for physical. When futures contracts mature, the holder of the futures contract typically either closes the position out, either takes a profit or a loss, or they roll the future into the next contract month. So if you currently, for instance, say had a futures contract, I think it's March, maybe the next the cash contract. So as we get closer to the March deadline for the March gold futures contract, people that want to remain long gold would typically sell their March futures contract and buy maybe a June futures contract, and we call that rolling the position forward. But what happens sometimes is people say, I don't really want to play the paper game in the gold anymore. I have this futures contract, which if I exercise my rights, I'm allowed to get delivery of physical metal. Each COMEX gold futures contract is supposed to represent notionally 100 ounces of gold. So by exercising your rights as a futures holder of a futures contract, you can say, I want to take delivery of a 100 ounce bar of gold, and by exercising your rights. But COMEX has a provision built in that if they don't want to, let's just say, meet that obligation that you have exercised, they can shunt the obligation to the London market in what's called an EFP, or an exchange for physical, whereas where the delivery obligation becomes the obligation of London and puts you into another process dealing with London to get your physical metal. And in layman's parlance, in layman's words, I call this my dog ate my homework. This is an excuse for not fulfilling a promise or an obligation that you've made to perform. When COMEX shunts the obligation to deliver physical off to the London market by washing their hands of the contracts that they have entered into or sold supposedly in good faith, it's the equivalent, in my view, of saying my dog ate my homework. That's why my homework isn't done. So this is the kind of shenanigans that are commonplace on the part of officialdom in the precious metals arena, and this is the kind of nonsense that goes on and has been going on for many years on the part of officialdom. And these shenanigans don't end at exchange for physical. They also include such things as central banks, when they list their gold holdings on their balance sheets, they count gold present in the vault the same as gold that's been leased out. And when central banks lease out gold, it leaves the vault, and they put an IOU in its place. So when banks are reporting, when central banks are reporting how much gold they actually have, they might claim to have 2,000 tons of gold, but 1,800 tons of it could be leased out, and maybe they have 200 tons in the vault, but the 1,800 that's left the vault is counted the same as the 200 that's actually present. And this kind of double counting is acceptable and allowed in central banking circles. If you and I tried using that kind of accounting practice in business, we'd be in jail. Central bankers operate in a crooked fashion, but everything about the metals market, the more you look into the metals market and the customs that, whether it's an exchange for physical or the double counting of bullion present in the vault, nothing is as it appears when you're dealing with, let's just say, the gold market from an institutional level.
And we should also point out, too, that central bankers are very much, they see the leasing question as a state secret. I mean, I believe it was Dudley that was confronted by a member of GATA in a public meeting a year and a half ago or so.
That was in New York, yes.
Yeah.
They don't want to answer those questions.
Was it Dudley?
I believe it was William Dudley, yes.
Yeah, it's a New York Fed guy. So, he was put on the spotlight in a public forum about the issue of leasing, and he, tucked tail and ran. Recently, Powell, our current Fed chair, back in 2012, was on record in an FOMC meeting talking about how the Fed was suppressing volatility and that he was scared about it. He said that it would blow up on the Fed. He was worried about that. We can see little footprints that disclose how there are, in fact, nefarious activities going on, and this is not publicly reported. There's no, transparency on these kind of activities, and it's very likely that the gold that is leased out with multiple claims, not just double counting, but God knows how many claims there are on every single ounce.
Yeah, well, listen, you made the comment and you made reference to little footprints. Former Fed Governor Kevin Warsh years ago made the comment publicly that there's a job for the Fed to do with regards to he called it financial repression. Financial repression is a polite way of saying rigging markets. And when he says we have work to do there, referencing the Federal Reserve and central banks, what he's really doing, what he's really saying is we, on behalf of the U.S. Treasury, need to rig the price of gold to make the dollar look pretty. Because if you put enough lipstick on a pig, you make it look like something you'd like to take to a dance. And that's exactly what these clowns have been doing in our capital markets now for a very, very long time. And you see, if you look at the reality of the situation, the reality of the situation is this is vis-a-vis the dollar. The Chinese are and have been America's biggest financier in the last 15 years. They are now holding less, I think 10% less U.S. government securities than they were holding in 2013. The U.S. government has continued to print additional new amounts of government securities to the tune of about $1 trillion a year since 2013. So that's another $1 trillion in 14, $1 trillion in 15, $1 trillion in 16, $1 trillion in 17, and they're going to do another $1 trillion again this year or more. And China has bought none and actually pared some of their holdings. Who's buying the bonds, guys? Who's buying those bonds? Do you think some of the money that's being used to buy the bonds might be a part of that 21 trillion in missing money? Do you think that America's maybe buying some of their own debt? You see, because this is, if you get your head out of the sand or other dark places and you start contemplating who's buying the debt, you very quickly come to the conclusion or the rationale that America has to be monetizing its own debt. And you see, and the Federal Reserve, of course, says, oh, we're not engaged in any QE. And you know what? The Federal Reserve probably is technically correct, because it's the Treasury that's monetizing the debt with the dark dollars that have been created off book. So you see, this is the way they get around admissions of nefarious activity in markets. They do so by using legalese jingos, where the Fed says we're not engaged in any QE. Well, okay, you're right. You're not engaged in any QE, but you're acting as an agent to buy the debt for the ESF. And they're buying that debt and they're stuffing it into a black hole. But because the debt is being bought, because you know what, boys? We got a 10-year bond still under 3%. And the world's biggest buyer, supposedly, of government debt isn't buying any and hasn't been for 3 or 4 years. So who's buying it? Don't tell me Ireland or Belgium. I mean, because that's just nonsense.
Hey, Rob, this goes back to, you described this as the derivative price control grid, essentially, run by the ESF. How long?
Exactly.
How long can this go on for? Can this just go on for indefinite time periods, or when does this get called out? When does this finally start to come in on itself?
Well, I would suggest to you that America's being called out on this now. What we are discussing and what we are referencing is the reason why the BRICS nations and why China and Russia in particular have outlawed the dollar. How many countries in the last 3 months have gone off the dollar and have claimed that they're going to settle no more of their international trade accounts with dollars? We've seen Venezuela leave the dollar. We've seen Iran has outright banished the dollar from any trade. We have China dealing in oil with Russia in non-dollar. We have China dealing in oil with Venezuela non-dollar. We have, my goodness, it seems to me it's a new or a different country every other week that's saying no more dollars in their international trade. And a lot of these countries are oil producers. And you see, the reason why this is happening is because countries, have become plugged in and have become awake to the poor stewardship that America has demonstrated in their stewardship of the world's reserve currency. It's not because they hate Americans. Listen, this malfeasance in the capital markets is at the root of a very, very large amount of our international friction that we see in the world today. And, God bless Donald Trump and everything he's trying to do. But if he can't get his head around and try to rein in this entity called the Exchange Stabilization Fund, its nickname is the Wurlitzer by the people in the intelligence establishment. They refer to the ESF as the Wurlitzer because it plays the tune of the people who control it. And I'll tell you one thing, Trump would be doing humanity a very great favor if he got on top of this and reined in the tune that the Wurlitzer's been playing. Because assigning false values to rare and dear things on the planet is not a very good way to foster peaceable international relations.
All right. Well, Rob Kirby, thank you so much for joining us today. Before we let you go, were there any last thoughts you'd like to add, and where can our viewers find you online?
You can find me online at kirbyanalytics.com. My parting words would be long real stuff. whether it's gold, whether it's silver, whether it's some storable food, and maybe a means to protect it all should it come to that. These are important things to do and responsible things to do in this world today.
All right, great. Well, Rob Kirby, James Anderson, and Eric Dubin, thank you all for joining us here for our weekly SD Metals and Markets Wrap.
Pleasure being with you guys.